Okay, hi everybody. Welcome. Thanks for coming. I'm so glad that you're here. My name is Rachel Tepley. I am the owner and founder of Nurturing Nannies. And we today teamed up with Rachel Lawrence from HomeWork Solutions, and she's going to cover everything we need to know about being paid legally and why it's so important. So I'm just going to read her bio and then I will turn the floor over to her. So Rachel's 2-decade career has touched nearly every corner of the nanny industry. Nanny, placement counselor, agency owner, former nanny employer, and operations manager for a leading nonprofit before joining HomeWork Solutions in 2019. She brings a practical, well-rounded perspective, deep industry insights, and a passion for advocacy. This is evident in her 2 terms on the INA board, which is International Nannies Association of Directors, and her founding of fairandlegalpay.com to promote legal pay awareness. Rachel is immersed in the nanny industry, and her passion for it shines through in everything she does. Whether speaking to top industry conferences, leading webinars, or engaging in one-on-one conversations, her mission remains the same: education and progress. She firmly believes that when we know better, we do better, making knowledge the first step towards positive change. Beyond that, she pushes the industry to strive for higher standards, creating a stronger, more professional landscape for everyone. Okay, Rachel, go ahead and take over.
Yeah, absolutely. Hi, everyone. As mentioned, I'm Rachel Lawrence of HomeWork Solutions, former nanny employer. Um, and so I sort of understand a lot of different perspectives here, and I hope I bring that to the table. This is always meant to be all inclusive for everyone and anyone who's watching this to just understand more about all of this. There's a lot of detail, there's confusing information. I'd love to say that chat knows everything about this, but it doesn't. It tends to bring in too many laws at the same time, and then it doesn't make any sense. So let's breeze through sort of the building blocks of it, right? Let's start with the foundation. Let's put the house on top. Let's throw some paint on it and decorate it, right? So that when we get to the end, you have a very clear understanding of what this house looks like and how to make it work for you, right? So basically, this is everything you need to know about fair and legal pay and how to make all of those things work for you. Let's see if it'll let me change my slide. There we go. Oh, golly. Before we start, I just want to let everyone know this is not specific tax, legal, or accounting advice. This is for educational purposes. If you have very specific questions, we can always work through those. You can work with other tax, legal, and accounting professionals to get the answers you need for your specific numbers, your specific situation. This will give you the guidelines so that you know what questions to ask to make the best use of that time. So, a friend of mine always says, no agenda, no attenda. And I firmly believe in that. If somebody won't tell you what they're going to talk about, why give them your time? Here's what we're going to cover. These are sort of the topics that we'll go over. And then as we get towards the end, how to put them into action for you in your nanny position or your next nanny position. So, again, we have to start with that foundation. Let's start with federal law. These are not the most intriguing things you will ever read in your entire life as far as page turner level of things. This is not like a great novel, right? But it is useful information that basically everything else that we're going to do is built on top of. So nannies are the employees of the families that they work for if you're working a regular nanny position. Now, my friends that are NCSs, there's a little bit, I won't even call it gray area, there's just options over there. Maybe if you're only doing tutoring, you're also sort of in that bucket, but otherwise you're really, really the employee of the family that you work for. How do we know this? FLSA, which is the Fair Labor Standards Act, goes through, it's a huge document, goes through who's an employee, why they're an employee, what are hours worked, what happens if you're on call, overtime. It's a huge law. And it came into play, almost 100 years ago. And we'll go over that more in a little bit, but it basically says you're an employee. And then the IRS says, okay, now that you're an employee, and again, it reiterates why you are and what's called employee classification. This is how taxes apply to household work. So these are sort of the two baseline laws at the federal level that get us going on that foundation. So, who isn't an employee? I touched on that a little bit a moment ago. It has to be certain categories of workers, basically, that are controlling the work being done, meaning they're setting the hours, they're setting their pay. They can send in substitute workers. They offer this work to multiple clients, and these people are self-employed. That's why I say we have options in the NCS world or maybe the tutor world, to decide either situation by situation if the law dictates we're an employee versus an independent contractor, i.e., self employed. Sometimes different situations may warrant you being in one bucket or another. Or sometimes it's sort of on the fence, right? And you just need to define that in the way that's possible within the job. Again, nannies are never, ever in this category. And this is actually pulled directly off the Department of Labor's website. And it just sort of helps clarify this because it can be confusing, whether it's the business world, which this graphic is slightly more geared towards, or our world, right? There are some very baseline things. You're an employee if you work for someone else's business or household. You must be paid hourly or salary or by the piece. We'll touch on the salary piece later. It has to do with if you're using their materials and their equipment and their tools. Our tools are a little different, right? They might be sippy cups and diaper bags and diapers and things like that, right? Toys. Um, Typically, an employee works for one employer or maybe one or two. There's a continued relationship with that person. The employer, in this case, the family, decides, things like schedules, what you should do, what you shouldn't do, how you should do it. Um, Whereas if we look over at the other side, the independent contractor, they're really running their own business. They're paid at the completion of their work. I'm going to guess you get paid before those kids go off to college. So you can see that these just don't really match what we do as nannies. You don't bring all of those diapers and things with you when you come to work each day. You generally don't work for 25 employers at the same time. Um, Temporary relationships that, again, you're usually completed. It's say 6 weeks. You get paid at the end of the 6 weeks because you finished the task, right? Think of someone painting your house. That's a really good example of someone who's an independent contractor, right? They you might tell them a color, you might tell them, what time frame works well for you, but they show up that morning at 8 or 9 or 8:30. They decide whether they go up and down or side to side with paintbrushes. They decide, gosh, it's too hot today or it's raining today. I'm not going to come. And they get paid maybe a little bit upfront for supplies, but ultimately generally paid at the end of the work. So the biggest question I get asked about this is, but I only work part-time, or I only work for this family every once in a while, or I only work for them over the summer or Christmas break or something like that, right? So rather than quantify the amount of time, the IRS and labor authorities go about it a little bit differently. They look at thresholds of the wages, the amount you're being paid. So families have, let me take a step back. Families have to pay FICA taxes, Social Security, Medicare taxes, if they pay an individual $2,800 a year or more for this calendar year. Goes up a little bit each year. Generally speaking, and we'll visit this a little later, those FICA taxes at Social Security and Medicare are divided between the employer and employee, and each pay half. But if they don't choose to withhold your half from you, the employer pays both halves. And then, a lot of it has to do with, is this your principal or principal occupation? And if you're over the age of 18. That all being said, it also can be a lot lower threshold where families start having other obligations like unemployment taxes. Varies by state, generally $500 to $1,000 paid to an individual, and now they're looking at maybe not needing those FICA tax contributions to go in, but they do need to pay into the unemployment system. So I promised we'd revisit FLSA because it is such a comprehensive, huge law. FLSA, like I said, came into effect about 100 years ago. It was a turning point in worker relations with employers. If you're a fan of history, this is what's called the Golden Age. It is the age of the titans of industry, the robber barons, however you want to phrase that. People like Carnegie, J.P. Morgan, the Vanderbilts. I'm missing one, but I can't think of who it is at the moment. These were people that they were so powerful, and many of them had monopolies that they could basically dictate any terms of work. And especially if you worked a specific trade that they were very much in that industry, it was hard to find work if you didn't do what they asked. It could make it where your livelihood was in jeopardy. Since we've put in a lot of laws into place that help with things like monopolies. And one of those laws is the Fair Labor Standards Act that went over how people needed to be paid and basically the rationale behind it. So things like minimum wage, which at the time was 25 cents, when overtime is due, how people have to keep records to prove that they're doing correctly. And a big driving factor behind this was child labor, because children were going into the mines, into the factories, they were being injured. And they made sure these applied to the whole nation, part-time, full-time workers, private sector, public sector, everywhere, almost without exception. One of the exceptions was domestic work. No one wanted the federal government regulating what they could do in their homes. So domestic workers had to fight for another 36 years to be included in the Fair Labor Standards Act. So this victory was not easily won. And so we need to make sure that we are taking advantage of it and making sure that our work is always valued and paid out and classified in the way that it should be. So one of the things that it sets out is that you have to be paid hourly and you have to be paid overtime. A lot of people say, well, I want to be salaried, or a lot of the employers are used to being salaried themselves. So it doesn't really dawn on them that a household worker should be paid hourly under the law. So there's sort of an easy rule here. There's something called the FLSA exempt test. Exempt means you are exempt, you don't have to pay hourly and overtime. Whereas household workers are non-exempt, which is what most employees actually are in this country. The exempt category, the easy rule to think of is you can qualify as exempt, generally speaking, if you do not use your body for work, whereas you are non-exempt if you do use your body. That's basically, if you go through the different exempt test or the different categories of exempt, you'll see they sort of follow this, right? People that are executives or administrative and work in an office, outside sales professionals, IT people, and then what they call learned professionals, a professional exemption for people that get an advanced degree and generally have to have some sort of licensure, like an attorney, a doctor, a dentist, a high level accounting person, those sort of things. Those are who are exempt and can be paid a true exempt salary. Otherwise, every bit of compensation has to be linked to an hourly amount. So, that way you're paid time and a half for any overtime hours that you work. Because again, working more than 40 hours in a week is hard on your body if you are using your body for labor. So let's jump into those overtime rules a little bit. The federal law is anything over 40 hours is time and a half. There are some exceptions in certain states for live-in employees, but generally speaking, you can sort of figure out who truly is categorized as a live-in employee by looking at this 79B. FLSA, like I said, is so vast that the government has taken pieces of it and basically made these fact sheets that explain this chunk, and it gives real life examples. So it's very user friendly. So 79B is the one for domestic workers that are live in. Some sort of quick tips: you have to live in 5 consecutive days or more to be considered a live in. Basically, you can go home on the weekends, right? Although some people live in, excuse me, full time. And again, these sort of vary by state. And always, overtime should be paid at 1.5 times your regular rate of pay. So, I know that we still have this want sometimes to be salaried, to have a predictable income. And there are ways to do that while staying within the bounds of the law. Um, the most useful term is guaranteed hours. So it's basically a concept where we look at what a normal week would be and we work backwards. So let's use this example to just sort of work through one, and you can think about how it might apply to your job. So if a family says, hey, listen, we want you to work 45 hours a week for $1,040. It might be a little flexible. Some weeks you'll work 43, some 48, but round about 45 on the regular. So I would suggest that you basically work backwards from there. You say, okay, that top number was 48. They said I might work as much as 48. And so you work with that and the amount that you're thinking of gross is before taxes are withheld. So 1040 gross per week. And when you back it out, taking into account the overtime hours, it ends up being 20 hours is your base wage and 30 hours is your overtime rate. And that way, you've sort of built in up to 48 hours a week. That being said, while you can go up to the 48, we've built in those overtimes. If you work more than that, they need to pay you additional amount of money. They can't bank it and say, well, you worked a little extra this week, we'll have you work a little less next week. That's called banking hours, and you're not allowed to do it. It's always calculated within the same 7-day work week, and that needs to be consistent. So you can see, if you worked another 2 hours, you worked 50 that week, they need to pay you 2 additional hours at $30 an hour. So 2 times 30 is 60, 60 plus the 1040, you're at $1,100 for that week you work 50. Hopefully that makes sense. So again, I promised that we would then revisit the tax piece of things. I mentioned that FICA taxes, which are the collective name for Social Security Medicare taxes, these taxes go to pay for these programs, right? So that we can retire, so that we can have medical coverage, in either super low income sort of scenarios, or also, once we do retire, so that we are taking care of the elderly in our country. And this is a total of 15.3%. Generally, this is split between the employer and employee, meaning the employer pays 7.65%, and then they withhold 7.65% from the employee and then hand both halves to the government, right? This is not the totality of taxes, though, as I'm sure many of you are thinking. On that orange side, the employee side, you also are going to have your federal income taxes, your state income taxes, local income taxes where applicable, right? Well, the family also has additional taxes that they pay that many times as employees we don't really think of. They are paying into the unemployment system. That's how that system is funded. So they are paying a very tiny amount to the federal government for unemployment. And then the bulk of their unemployment tax dollars are going to the state. That way, someday if you need to file for unemployment, you go file with the state, and the state pays you your unemployment benefit out of the state funds. So sometimes people say, well, then what's the federal one for? The feds basically back up the states. And a few years ago was a really great example of that during the pandemic. Many states essentially ran out of money because there were so many people filing for unemployment during the pandemic. So they can then go take a loan from the feds that they have a certain amount of time to repay. And that way we don't ever have a system that breaks, right? They're backup systems. And then, if the states don't repay it in time, just like if you don't repay a loan in time, there are penalties that the Fed starts collecting more uh, tax dollars from employers in that state to sort of pay back the um, the loan. And then sometimes there are actually local taxes as well. I live in Oregon, and here we have a transit tax. So any employer in this state, for example, whose employees use the roads, there's a small tax as well on that helps fund public transit and also the roads. Not all places have those, but you are seeing them more and more, especially as federal dollars are sort of being dialed back. So it's something that may come up for you all. A sort of my closing statement on this, I guess, is I'm in payroll taxes. I don't like paying taxes either. But they, as you can see, they all go towards things that I do want later, right? My future self, my future Rachel, I want her to be able to retire someday and have unemployment if I need it and things like that. So sometimes it feels like you'd really rather keep that money. Maybe you'll just try to work off the books. But I think if you ask your 66-year-old self if they want to go ahead and have some Social Security benefits, they're going to say yes. So that's the sort of federal block, right? We went over a lot of information there about how federal laws work, about how federal taxes work. But the way the system in our country works with all of this is that the Fed is permanent. It's non-negotiable, right? All states in the union have to comply by federal law. However, states can then add another layer onto it. We'll call this the base of the house, right? And they can say, okay, yes, those federal protections are great, those federal laws are great, those federal taxes and systems are great. But we also want some to take care of the people in our state. And even sometimes localities will do this too. Um, so they can go above and beyond or layer on top of federal law. They just can't go below it. So, for example, I know most of you watching this are probably in Minnesota. And so I promised again we'd revisit that live-in overtime. You can see that while a lot of places in this country do not pay live-ins overtime, in Minnesota, you all do get time and a half if you work more than 48 hours. Also, Minnesota has a sick and safe law where you earn paid sick leave to make sure that you can go get preventative care if someone in your family gets sick, if you get sick, domestic abuse, sexual violence, stalking. All of these things are meant to keep you still in being paid and not suffering financial loss, um, so that you can go deal with these, seek treatment, seek help for you and your family members. Also, some localities, like I said, will stack a little bit more on top, is usually how it works, so that you have additional leave. So now we've talked about sort of the rules, the laws, and the taxes that are bringing your pay down. Let's work on getting it back up, right? I know a lot of people, like I said, say, I don't want to pay those taxes. That's less take home money for me. Well, we can play smart within this system and get not only the money, but actually benefits too, so that your total take home package maybe even feels a little bit more robust than it might have if you were just taking that cash home. And again, your future self is going to thank you, I promise. Um, so here are some things that aren't taxed if they're built into your compensation package. The biggest bang for your buck, health insurance reimbursement. And who doesn't want health insurance, right? If you're already paying that out of pocket or you don't have it, let's start thinking about working that into your compensation package. Why? Because if it's included in your comp package, the family's not paying taxes on those dollars that they give to you, and you're not paying taxes on those dollars, as long as you follow some very simple rules, which means, that could save you a decent bit of money. I have an example a few slides later that'll go over that, but it can be like $1,000. So it's a big tax savings. Other big ones are education. They can reimburse you for educational benefits or include in your comp package educational benefits for early childhood education, or maybe you're working with a special needs child and you're going to go do that, or conferences. There are lots of things that fall into this, and that's a big number, up to $5,250 a year they can give you. Now add that to the healthcare reimbursement, that Sarah. We're getting a lot of benefits in here, spending a lot of these comp dollars without paying taxes on them. So, round figures, let's say you're just going to do those two, right? That's $10,000 the family's going to give you that you're not being taxed on, and neither are they. So I'm going to make up an example. If you were going to make $60,000 in what are called cash wages, well, you'd be taxed on $60,000, and so would the family. But if we add those two tax-free benefits and follow these simple little rules, now you're only being taxed on 50,000. That sounds better, doesn't it? So we can whittle away these taxes based on what we want and we need in our comp package. Other things are transit. So meaning if you need like a Beltline pass, public transit pass, those sort of things is $325 per month, not just per year. Parking, same thing. Working in a big city, paying for a parking space, up to $325. Mileage reimbursement, if you're more of a commuter, you can't take this for to and from work. That's the government considers that your responsibility. But on the job driving, so soccer practice, taking and picking up from school, play dates, target runs, whatever it is, right? When you're driving on the job. And then cell phone isn't a specific amount. The government says that it should be a reasonable amount based on work use. So not your whole cell phone bill, right? Because that's not the only time that you're using your cell phone to talk, text, etc. So figure out what it is, based on the number of hours you work. I think that's the easiest situation. A full week with no hours off duty is 168 hours a week. So go ahead and just sort of see based on how many hours you work. Most of us work like 25% of that. So maybe the family could take, 25% of your cell phone bill and reimburse you for it. This is probably small on your screen, especially if you're watching on something like your cell phone. And so I'll give you sort of the take-home message here. Having these non-taxable benefits matter, particularly if you're at about $50,000 a year in wages. Why? Because we have something called a progressive tax system in this country, meaning the more you make, the more you pay in taxes, percentage-wise. So everyone pays this base amount, 10% or so. On the first, this year it's about $12,000. That goes off to the government to pay for baseline things, right? Not to say you can't get tax credits and things to help, but basic situation. And then as you earn more, you're still taxed that amount on that base, but then you're taxed additionally on more money you make, right? And there's this big jump right around $48,000. And you go from paying 12% income tax on that additional amount to 22% income tax. That's a big deal. A lot of nannies hover in this category, right? They're making about $50,000 a year. So again, like my example a minute ago, if you can take that $60,000 taxable income down to $50,000 taxable income and have your benefits, we're getting closer, right? If you were at 55 and you can take 10 off, now we're at 45. So we're in that lower tax bracket. So these things really do matter in the grand scheme of things as to how much money you're taking home versus paying out to the government. And again, then you have those lovely benefits, right? Of health insurance, of education. And you may have, for instance, been paying for those things out of your post-tax amount, right? The amount that's in your bank after you get paid and after taxes are withheld. Why not pay them before taxes are applied, right? That's a better use of your money. So again, I promised a more specific example instead of having something sort of theoretical. So this top box, it's just sort of our assumptions, right? How much are people making? You know, an effective tax rate is sort of after everything's been factored in, how much you paid. And then this middle box is really what applies to the employees. So that first column is no healthcare reimbursement, right? It's just sort of straight wages. The second one is if you have an individual healthcare reimbursement, and then the last one is a family plan. And so you can see, let's stick with the single individual one, that middle column in the middle box, right? You're going to save about $1,000 a year if you just incorporate this one non-taxable benefit of healthcare reimbursement. And again, if you need help playing with these numbers, that's why HomeWork Solutions here is to help you. Franny and I can help you work through that. Franny was a nanny. I was a nanny. We get it. So, you know, sort of the take-home message on this is who doesn't want to save $1,000, right? If you can't think of something to spend $1,000 on, you can send it to me and I will pick out something lovely for you and send it to you. No, just joking. But I'm sure you can think of things that you would like to spend $1,000 on, right? So just start thinking about it either for your next raise and review period or maybe your next position. So now that you've understand this stuff, or more than you did, no one's going to quiz you on the details, and you've worked through some of the things maybe you want. Maybe you want that healthcare reimbursement. Maybe you want to build in something that we haven't even considered on these slides, which is a retirement plan, like an IRA, to have in addition to the Social Security that you're going to have. These things, once you've done all this work and all this thought and advocated for yourself, you really need to make sure that it's all written up in a work agreement. Why? Most people say, oh, so you can make sure you have it if there's ever a lawsuit. Well, yes, but most things don't get to that point. I like to think of work agreements as just communication documents, right? This is what we've all agreed to. We all have the same understanding. On a busy day when you've been running around with the kids and mom and dad have been working all day and now they're running around with the kids and you can't remember if Juneteenth next week is a paid holiday, it's so much easier to just look at the agreement, right? Instead of being like, oh, I know the baby needs to eat. Oh, sorry, I need to go, but I just wanted to know if next week's a holiday and if it'll be paid and how many hours it'll be paid for, right? All of that can already be done in this communication document. You can say, yes, Juneteenth is a holiday. You'll be paid your regular rate of pay for 8 hours. You know, it saves you that conversation and also finding the moment. Like I said, I was a nanny. I get it. That transition time is hard. You need to really have the best use of that time. You know, the baby ate 6 ounces or whatever it is. And sometimes it's hard, especially as caregivers, to work in questions about us. So it's just a communication tool and do go into the specifics, right? Don't say we get 2 weeks of paid time off and leave it at that. Define what that is. How many hours is that? If the family has a minimum or maximum, you can take it at one time, you know, you have to take it in 2-hour increments. Most people don't care about that stuff, but some people do. You know, make sure that you understand if you usually work a 10-hour day, and the holiday's 8 hours, what does that do to your overtime for the week? Are you going to get paid less, or are they doing those guaranteed hours so that you have financial consistency? Um, it's so much easier to talk about this on paper. So I would just say make sure that sort of these top 10 are addressed in every work agreement that you have. We certainly have a templated one on our website as well. And all all of this comes together on this slide for me, which is this is so important. Being paid legally is so important. It validates us as an industry and as employees. Again, it took us 36 years to get the government to recognize us in the Fair Labor Standards Act. This is one of the ways that we quietly stand behind that and say, no, I am a real employee. My career is a real career. All of those things We quietly call respect to ourselves and our industry when we ask to be treated under the law as professionals. And it allows you to have things that you may or may not even be using at this moment, like verifiable income. Do you want to buy a house or a car or something else? Sometimes even credit cards, cell phones, those sort of things need them. What happens if you get hurt or you're unemployed? These systems are built to help you, but only if they know you exist as a worker and you're paying into them and the family's paying into them. And then that future self, right? Down the line, you are going to want to be able to stop nannying someday when you're older, and have retirement. And even if you are saving for retirement yourself in some other way, those Social Security, Medicare dollars, they're just there for the taking if you pay into the system. And you have to pay in for 40 quarters. That's 10 years. And they're going to draft your benefit, decide what your benefit is off of your highest earning years. So it's important to not just say, well, I used to work in an office and I'll draft Social Security off of that. If that was a while ago, maybe those aren't big dollars, but the ones you're going to make in the future are. Nanny wages are going up. Make sure that you are keeping pace so that when you want to retire, you get the biggest Social Security benefit that you can get. You can piggyback sometimes on a spouse's benefits, but there's a lot of ifs and ands to that. Make sure you're safe in your own respect, right? Don't count on that. So that's what I have. As far as general information, I'm always here for questions, either now or later. My email address is super simple. It's Rachel, Rachel, at homeworksolutions.com. Solutions is plural. Also, you can call the 1-800 number. We're a small company. There's only about 30 of us. You can call and ask for me. You can call and ask for Franny. Franny's email address is just as easy as mine. It's just her name, FRANNY, at homeworksolutions.com. So, Rachel, I'll kick it back to you in case you had any additional questions.
Perfect.
Okay.
I don't right now, but I'm gonna go ahead and shut the recording off just so we can kind of open up the floor to Q&A without people feeling like they're being recorded. So I'll do that now.